Good morning once again. This is our masterclass weekend session. A little different from the usual Saturday evening. We are taking this 13th Jan Saturday morning. It's 10 o'clock. Some logistic issue, and that's why for this Saturday we are taking it in the morning. Nifty, I would say, wow, 247 points gain on Friday's session. Show of strength, definite show of strength. And we saw this very clearly last week. One day of Reliance and one day of the entire IT pack, and we have a new all-time high. Weekly charts. So I have the weekly, daily 75 over here. Weekly charts, exceptional strength. I think it's been going up consecutive, only 1 week of fall over here. In terms of our trend indicator, momentum indicators, or even if I look at the Heikin-Ashi, there is no sign or alert or flag of bearishness or prospective bearishness. Zero. Is there any sign of slowdown? Yes, the Heikin-Ashi body starts to shrink. We did see some slowdown. In fact, all this while, we did manage to see that the market was giving us some signs of momentum slowdown. And it was there, but it did not get reflected in the trend. For me personally, it was a very bad week. In fact, it's not a very good month so far because I got some prospective shorts which just, of course, did not come down. So that's exactly the kind of market we are in. Very strong bull grip, and any kind of momentum slowdown is slowing down in terms of a range. It's consolidating more in terms of time rather than price. When it consolidates more in terms of time, it essentially goes flat, or it just falls and bounces back. It does not give us a proper structural multi-leg down move. That's what is missing, and shorts will only work in those kind of a multi-leg down move. So bottom line, it has picked up fresh momentum again with Friday's move. It has given us a breakout. I would like to definitely share one point with you very clearly. The index has respected very well its previous highs as its future supports. This is a good sign. The structural divergences or signs of slowdown that we have been noticing and we are still noticing continues. But as I said, price is not reflecting that. Until and unless price reflects that, it's not going to happen. So stay cautiously bullish, cautiously, because after such a multi-week run-up, it makes sense to be a little cautious. If we look at the weekly charts, we can see two legs of continuous rally on the upside. If we take a look at it from, let's say, from this point all the way up till, let's say, this one, this was okay. Let me delete this. I want it in terms of days. So I got it in terms of percentages. So this tool is going to help us from this low to this one. This is what I wanted. So it's around 16 bars that the last one-way rally lasted. And over here we are around 10 bars. So this does not mean that we have 6 more bars to go. It's just giving me a sense of the extent of the move that we had here vis-a-vis what we are going through at this juncture. So weekly charts, strong, holding well. Daily chart giving us a breakout. Cautiously bullish, strong move, and there's no particular reason to call for any kind of bearishness. I would just like to share one small thing, that all-time high breakouts or any kind of significant high momentum breakouts, they do at times lead to breakout failures. I don't know whether this will fail or not, but they do. In that case, just do one thing, just keep an eye on Friday's low, which is this one. Friday's low, if it gets compromised on the coming Monday, then we can say this was a breakout failure. Then the rest of the things we can anticipate, or it may or may not unfold. That's a different story. But whenever you see any kind of breakout, always keep in mind that there's a chance of a breakout failure. Breakouts, I think 50% of the breakouts fail. And so keep an eye on Friday's low. The low you'll not get to see clearly on my Heiken-Ashi, and that's why I shifted to the bar chart. So on the downside, Friday's low. On the upside, the sky is clear and it can go anywhere. If I take a look at the ratio charts, then the ratio charts of the Nifty vis-a-vis the index, the dollar index, is yet to make a new high. And in terms of gold also, the Nifty is showing far better strength vis-a-vis the dollar. So as such, not much of a weakness coming in from the ratio charts. CNX 500, exceptional rally. Now you would see, in fact, this drawing, which is there on the 75-minute time frame, will be more prominent and clear if I show it to you on the daily time frame. This is the rising diagonal kind of a behavior, which is like this. And we did see the prices coming off and then picking up again. These are exceptionally strong markets. Generally, when you have a ending diagonal, a rising wedge after a rising market with signs of divergences, the obvious expectation is a slowdown or a correction. Very, very obvious. But this is a very, very different kind of a market. It seems that it is in no mood for any kind of a meaningful downside. So strong movement coming in from the broader markets, 500. Mid cap continues a nice little slant divergence, but you know, the word divergences in this kind of market is just getting discounted very badly. But nevertheless, we cannot discount it. We just have to keep an open eye on anything that we observe. So strong from the mid caps as well as the small caps. Small caps angling further up, and it is forming pretty decent. So let's say if we understand the small caps first divergence led to a 1 week consolidation. The second divergence led to a pretty sharp 2 week correction. And now we can see, okay, we should also consider this a 2 week slowdown. And now I don't know what is coming our way. Difficult to say, but we should be careful. And that's why the word I used, cautiously bullish. Bank Nifty. Friday's low, very important. So we were discussing in Friday's session few stocks from the banking. My view in the prep sheet based on Thursday's close was the market's looking okay, but if and when the market slows down, the possibility of the slowdown coming in from the banking financials back seems to be slightly higher. Why? One, the short-term trend and the momentum is down. The momentum is definitely getting matured, the momentum reading. Two, the weekly close is offering us a red HAGB, which calls for some weakness or a reversal only if the low is broken, that is 47,000. You've got a high close to that 46,000. So sub 4,700, you've got a room for 46,000, a 1,000 kind of. But for this story, Friday's low is extremely important. If it continues to show strength, if stocks like ICICI Bank and State Bank shows a bit of strength, then this story is not going to unfold. On the other hand, you're going to get a rising market. I think possibility of both going forward up or breaking below the low on Friday, below Friday's low, is 50-50. The fact that the matured momentum reading can lead to the fact that now it's not going to fall, it's going to go up. It's also very much there. So keep an eye on which pocket of stocks, especially iBank, SBI, HDFC Bank, keep an eye on those and see what's unfolding there. Next 2 days, I would say Monday, or if Monday is a dull day, then give it one more day, Tuesday. I think next 1 to 2 days trading session on the Bank Nifty is going to be important. I think if it sustains above Friday's high, then the chances of a rally and the chances of a fall deteriorate significantly, and vice versa. So keep a close eye on the banking and the financials also. You'll like the way the CNX Finance on the daily chart is looking like. We've got on red HAGB on the weekly. It is giving us a bit of a signs of some slowdown. It's very obvious from the weekly chart. It's got its low previous highs at 20,400. The daily is very, very similar to that of the Bank Nifty. So some move you can expect. Definitely some move is shaping up within the banking pack. Auto, nothing on the weekly. Nothing that we can take away from the weekly. Come to the daily. Remember this nice little structural divergence, and the ratio chart was weak. But again, it just came off for 2 weeks. What's happening now? The momentum has started to reverse once again. So there's no particular rational evidence on the daily time frame that we should be saying, okay, some kind of bearishness. Not really. Again, the same logic. Based on Friday's move, the Nifty went to an all-time high and gave a breakout. What you can check is which are the sectors of the charts which did the same. Fine. So we can see that it was essentially Thursday's move, which gave a breakout to CNX Auto. This one. Now, interestingly, take a look at this. The bar chart will make more sense, or it will be more clearer to you. It's the Thursday's bar which gives you the breakout. It's the Friday's bar which inches below the low but bounces back. See, breaking levels is 50% important. Closing below that is very, very important. So Friday we have a dip below the low, but it bounced back with the overall markets. This is really interesting, I would say, CNX Auto. So no signs of weakness per se, but there is a small little possibility at all if you are looking for any weakness within the CNX Auto. It has to come below Friday's low, hopefully. A slip below the low and a close below the low. A bull market generally breaks the low and bounces back. A bearish market, you will notice if you have ever experienced a bear market, it will just tease above the high and then slip significantly. So that's the nature of strong bull grip and bear grip. So we need to be careful with the auto there. Consumer durables, nothing there that we can say apart from the fact that the trend is up, the momentum is up, and etc. etc. Let's not waste further time. It's been a very strong chart, the consumer durables. Energy, you remember this channel that I had drawn, and it's been there on the daily chart for quite some time. It's been touching the highs of the channel. Exceptional run on the weekly. No problem here. There's no point of reading these things. It makes no sense of RSI overbought, means nothing in this kind of market. All this while the momentum slowed down, which means the moving averages came very close to each other. In this case, the moving averages were opening up. In this case, the moving averages started to contract, come close to each other. And so the readings were kind of cautious to negative. Price doesn't come down. So, same logic. I think we have a successful breakout here. So there's no particular reason to go bearish. Continue the bullish view, but cautiously bullish here. FMCG can be a really interesting counter going forward. The reason I say this is strong trend and momentum reading on the weekly. You have a short-term correction. We have taken your short-term RSI readings over sold, which means that intraday traders, I think I mentioned this in the prep sheet on Friday morning, that you probably are looking for some kind of a short-term bounce back. Intraday traders can look at FMCG names, Hindustan Unilever, ITC especially. Monday, Tuesday, you can expect a short-term bounce back. What about the daily time frame? The daily charts have weakened both in terms of momentum and the short-term trend. Considering the weekly charts are strong, ideally should offer us a short-term bounce back. If the short-term bounce back does not sustain, then the possibility of further downsides open up. If it sustains, then considering the weekly charts are strong, it's essentially a bullish chart. For short-term traders, keep an eye on the FMCG names. Now this is IT. As I said at the beginning of today's session, what more can we ask from the market? Beautiful move, big, surprising. In fact, the extent of the move surprised me also. What was shaping up was a classic Adam and Eve double topish behavior. What was shaping up is like a tease of these supports. What I could see was a bit of a formation of like a flag after the fall. Momentum was anyways down. Strong weekly, and the monthly charts are also very strong. But, well, it's okay that it did not break down. That's completely fine. But the way it extended means the short squeeze is very, 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 very evident. it seems like the market is, for the short especially, it seems like the bull grip is so strong that the market is creating some kinds of traps. It's the formations are such that the build up happens and then the surprise element. It was a gap up, Infosys, TCS, across the board, a big gap up. I'm lucky to say that before this day, whatever small short positions I had and we were discussing got stopped out on Thursday's trade, or else it would have pinched us a little bit more. So IT strong, surprisingly strong. Metal cooling off after a bit of a weakness with the momentum on the downside. Red HAGB on the weekly, very, very similar to what we saw on the Bank Nifty and CNX Finance. Trend is flat. There's not much we can say about the short-term trend. It's more flattish than actually down or up. We have a constructive positional structural divergence. We have one leg on the downside. This is a counter move. It's a retracement. Does this mean that it's going to open up in an ABC manner, or is it going to go further up? Considering the overall markets, going up is more likely. In this case, if we zoom in, we see that the Heiken Ashis have improved significantly. So any kind of a weakness has to come if the Heiken Ashi starts to deteriorate, as in shift down. So cautiously bullish here. I would say that if the market catches us by surprise, let's say Friday's breakout was a kind of a fake move, and all of a sudden from somewhere the market starts to, let's say, come down, let's say if, then the first sign will be Friday's low. So for the sectors, for the charts, for the indices, keep an eye on Friday's low. Pharma, short-term double topish kind of formation. Weekly is extremely strong. Daily slowing down in terms of momentum. No sign of that on the trend. Contra, possible, but I would not like or prefer to go contra in this market condition. I would stay away from longs at this juncture, and I will stay away from contrarian shorts also. And finally, we have the real estate. Better no comment over here. Like the consumer durables, exceptionally strong. Weekly, very strong trend and momentum readings. Daily, very strong trend and momentum readings here as well. So consumer durables and real estate, we can just avoid. Pharma, we are avoiding longs and shorts. It's the finance and bank Nifty below Friday's low. It's the Nifty below Friday's low. That can be interesting. FMCG is short-term bullish. IT definitely bullish. Metals, interesting, should be there in the watch list. So that's the view on the overall markets and the sectoral indices. Let's quickly take a look at your questions. Stocks that we can add to our weekly sheet. We already have, I think, 10 open positions in the weekly sheet, which are doing fairly okay, bit of greens and reds. But let's see what are the other ones that we can add to our watch list for the next week.